Color Outside the Box is a podcast series that focuses on creating a better you. Whether it's advice about family, relationships, raising children in this technological world, marriage, or careers, we seek to find the answers to help you live your best life. So start your Monday morning off right with me, your hostess with the mostest, Princess Miller, on Color Outside the Box right here on iTunes and everywhere podcasts can be heard. Well, thank you for tuning in to the Color Outside the Box podcast with your hostess, Princess Miller, and we are back in the studio with Miss Lorraine Sutton Evans of LSE Services. How are you doing today?
I'm doing great, and how are you, Miss Princess?
I'm doing great. Had a little technical difficulties this morning, but you know what? We still have the victory.
Overcomer.
Yes, ma'am. She is the owner of LSE Services, where she provides tax preparation, bookkeeping. Some of the other services that you offer would be
business consulting and tax consulting, tax resolutions. In other words, tax resolution is if you have a problem with the IRS or any state agency revenue service.
Yes, ma'am. So she is very smart and can handle any questions that you may have about taxes. And so with this being the beginning of the year and everybody's getting ready with those tax returns, I wanted to catch Miss Lorraine before her doors are flooded with customers and get her into the studio to talk about what can we expect this tax season. We know every year the government makes changes, some things that you can deduct, you no longer can deduct, and now you got to report certain things. So we're going to talk about some of those things today. So are you ready, Miss Lorraine?
Yes.
She came in with her notes, big smile. She is focused. She is ready. So let's hop into it. So some of the things that we can no longer add to use as a deduction on our tax. Let's talk about that on our tax returns.
Well, that would apply to the federal taxes. So what I would suggest to everybody, still use those, still give it to your preparer, your tax practitioner, your EA, your CPA, or your attorney when they're doing your taxes, because it applies to the state. The federal government might have done away with it, but the state hasn't. So the state still, those things are still applicable to the state, and it can reduce your tax liability to the state. And when I say tax liability, that's what you may owe or you're responsible for. That can be reduced by those deductions.
Yes. So I know last year everybody was saying, hey, start you a business because, certain things can no longer be tax deducted in order to make sure your tax liability is decreased. What would you recommend that people may need to start looking at as they get these tax papers together?
I wouldn't recommend starting a business based on taxes. I would recommend if you're going to start a business, you starting a business based on your life. If you don't want to be caught in the gamut of one day going to work and saying the day is your last day.
Yes.
Or we no longer need you. But to start a business to evade taxes is kind of ludicrous, because now you're putting yourself in another tax bracket. So it kind of defeats the purpose, because a business is profit. If you try to start a business just to decrease your tax liability, you're going to end up in a situation where you keep taking a loss on your business for 5 years or more, maybe 3 to 5 years or more. The IRS can come back and say, hey, that wasn't out of business, that was a hobby.
Wow. That is something that we need to know. What are some common mistakes? You've been a tax preparer. You've seen a lot of different scenarios. What are some common mistakes that people make when they're filing for taxes?
I think I had a client come in the other day with some issues from 2013. I have them come all the way back, sometimes 7 and 8 years. And one of the things that struck me, and I'm an active listener when I'm doing taxes, because you're going to say some things that's going to, bring some things to the table and to my awareness to correct. She said she couldn't claim her son. And I said, why not? And where does he live? And she said, he lives with me. I said, well, why couldn't you claim him? She said, well, the lady told me, and I won't name the place she went or her name. She said, well, I was told by a tax preparer, the one that prepared my taxes, that because he was 22, I couldn't claim him. But there is no regulation for that. You have to just go what the regulations are. Stick to the regulations. She can claim her son if he was 54 and he live in her house.
Wow.
She can claim him. With that being said, certain credits she can't get for her son. You know, she can't get for him if he's not totally unable to work. He has to be totally unable to work.
Okay.
And he has to be disabled and totally unable to work for the tax year. They don't care if he was last year, year before last. They're worried about the year we're in that you're filing taxes for. And his address is the same as her address. Then she can claim it.
Okay. All right.
A Social Security check does not make you totally and unable to work. People get that confused.
Well, you brought up a very good point. What about the people who have parents that are living with them?
Well, we live in a sandwich generation. You know, we're the sandwich. You know, the taxpayer's the sandwich. You're raising your children and your parents because of times in the economic state we're in. You're taking care of both. So you can claim your parents, but your parents don't have to live with you. Just make sure your preparer marks on that return. When you put your parents on there, you put on that 0 for the amount of months they've lived with you. You can claim them, but they don't have to live with you. They're your parents. We live in a sandwich generation. And that's actually in the publication. Your children that are away at college, they are considered, that is an absent. That's not that they don't live with you. It's considered a temporary absence according to the IRS. So guess what? You claim those children and you say, hey, they live with me for 12 months. They don't change their address because they go off to college. It's a temporary absence. Your children that are kidnapped, temporary absent. Your baby that died in that year, you can claim that child.
Okay. What are some other things that we can claim that we may not know, because you're bringing some revelation to my eyes this morning?
Yes. There are some, your medical costs, your premiums, you can claim your premiums. And hear me when I say this. If you are with healthcare.gov, you cannot claim those premiums because you get what they call a 1095A. So yours is different. But if you have a private, like on your job, you pay your insurance through your job. So when your tax preparer gets your W-2, on line 12, it's going to say DD. That automatically should say to that tax preparer, hey, their employer is paying a portion of their taxes. So let me see, they should be paying premiums. How much were your premiums per pay period? Bring your last check stub when you come to your preparer, because a lot of people don't know what their deductions are coming out of their check off the top of their head. You know, so bring your last check stub with you so you can get those deductions.
What are some other things that we can claim that we're not aware of? We talked about premiums. We talked about dependents. We talked about helping parents. What about other deductions? If you're just a regular person, just filing for, you know, your I'm not really familiar with the tax lingo.
So let me tell you what you can't file for. They do not pay us to go to work. You cannot claim your miles that you drive to work if you get a W-2. If you go out of town on your job and your job did not pay you for the mileage, their entire federal GSA amount, if they didn't pay you, let's say the amount is, let's just say it was 10 cents, but it's more than 10 cents. Let's just say it was 10 cents and your job only paid you 5 cents. Well, then on a 2106, you can claim that other 5 cents because those are employment related. 2106, that form, that's what that's for. So those are things, let's say, that they don't pay for, but you need to work. You got to need it to work. So they don't pay us to go to work from home to the job. I hear people say that I claim the miles to go to work. Why would the government be paying you to go to work? That makes no sense.
There are a lot of things that's going on today, because I do commercials for tax preparers, and I've done postcards and things of that sort, and to hear the stories that they come back with, and they'll be like, you wouldn't believe, they hadn't worked all last year and now they want me to get them $8,000 in a tax refund, and they hadn't worked at all. So what are some other horror stories? You got this look on your face.
I don't necessarily get the horror stories.
Mm-hmm.
Most of my clients, they don't come to me with that.
Mm-hmm.
They come to me because they're serious about their obligation.
Mm-hmm.
This is your fiduciary duty to
mm-hmm.
file your taxes. So they come there with that. But I hear the horror stories. When I hear the horror stories, they're when they get these letters and they go back to that tax preparer, and that preparer cannot help them.
Mm-hmm.
They cannot.
And some of them be closed.
Exactly. So, beware.
Mm-hmm.
When you and the IRS tell you, beware. You're not going to go to, let's say, the mall and go into a store and go shopping and there are no tags hanging to tell you how much everything is. You're going to leave that store.
Mm-hmm.
So when you go get your taxes done, you should know up front what you're paying.
Mm-hmm.
And if they cannot list it when in their lobby or somewhere, you should get up and leave.
Mm.
Now, but if you're into something crooked, when you get the letter and they come to me and say, well, they say I have to pay this back. Well, if you only made $2,000, how did you get $8,000? Why would the government be giving? Who are you to?
Mm-hmm.
You knew what they were doing. You just took the money. So let's get this straight.
Mm-hmm.
And let's straighten your situation out and show you how you can pay this back.
Mm. Wow. We're going to pause right here for a commercial break. We'll be right back. We're going to talk about more things that we need to be looking for when it comes to filing our taxes. Stay tuned.
What's up, everybody? Trey here to tell you about one of the best gym experiences in Mobile, Embrace Fitness Training Center. Embrace Fitness is more than just a gym. We offer personal training, speed and agility training, golf simulator, golf fitness, boot camp classes, child care, and even powerlifting. We're open Monday through Friday, 5 a.m. to 10 p.m., and Saturday, 7 a.m. to 7 p.m. We love families, and kids are welcome. At Embrace Fitness, we believe that a family that works out together will stay together and live healthier and happier lives. So embrace the new you. We're located on Airport Boulevard near Cody Road. Try Embrace Fitness Training Center today. Your first visit is on me.
Princess Creative Productions can provide affordable and professional video services for small to mid-sized businesses. Our in-studio virtual set shoots start as low as $200. Let our expert get to work on your next video project. Call 251-421-4490 to book your next shoot.
Welcome back to the Color Outside the Box podcast. I am your hostess, Princess Miller, and we're sitting here in the studio with Miss Lorraine Sutton Evans of LSE Services, and we're talking about things that we need to be on the lookout for as we file our taxes. And so Miss Lorraine was telling us right before the break, we were talking about some horror stories that she has heard of about people that think that the government is giving away free money. So we need to be aware of certain things that we can and we can't do, because like I said, I've done commercials for tax preparers and I've heard some horror stories. You know, people will come to you thinking that, hey, well, how much you charge? Well, hey, can you write me and it's like, no, I can't add you no dependents. I can't, create a W-2 or a W-9 for you. And then they'll go somewhere else and get someone else to do that for them. And then they'll come back to them and be like, well, they closed and now I got this letter and what do I need to do after they done got $10,000 back and they hadn't worked any. So what are some other things that you would admonish us to do as we're getting ready for this tax season?
I would tell you to beware. The IRS has updated their systems where when it comes to claiming children, especially for credits. And this is where the PATH Act of 2017 comes into play. This is why if you claim earned income tax credit, if you claim child tax credit, if you claim the American Opportunity Credit, which is the college credit, your taxes will not be processed. You can get an acceptance. It'll come back and say it was accepted, but it will not be processed until mid-February. So this is why, and it's because of all the erroneous taxes that are submitted to the IRS. So we have to be very, very, very careful with that. because people are claiming other people's children. They are two people thinking they can claim the same kid.
Oh, we're going to talk about that because that identity theft when it comes to taxes is so prevalent. I was a victim of it. Somebody